Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, who is not a financial advisor. And before we jump onto the main video, I have a small request. Please hit that like button, and if you haven't subscribed to the channel yet, then what are you waiting for, guys? See that red button like a bull and smash it. Now let's jump onto the main video. So guys, today's video is about one of the most controversial company out there, which people are quite afraid of if they are invested in it, or people are thinking twice before investing in it because of some crazy reasons which are out there. And I don't blame these reasons, because this has really affected the stock price in the recent months, days, weeks. But this video might help you to give a better outlook about this company, and this won't be a detailed video. If you want a detailed video, then please leave a comment in the comment section down below. So without further ado, let's just get started. Okay guys, so to start with, let's start with something positive, and therefore I will start with this particular article right here, which is from TripRanks, and one of the 5-star analysts from TripRanks has to say this about Alibaba. So Baba maintains one of the fastest top line growth rates and highest profit margin profiles among our covered internet mega caps, yet it is the cheapest. And this is what this video is all about, guys. So this video won't be a detailed video about Alibaba. It is just to give you an insight about this particular company and why this company has a huge growth potential, and we are just getting afraid because of some reasons which are okay, logical. And it might happen because we never know what can happen within the Chinese government and all the politics out there. But still, I am ready to take this risk, and this is what I'm gonna show you in this video. So let's get started. So if you just have a quick look at Yahoo Finance, we can just scroll down right here and just look at this incredible earnings per share. So for Q4, it was earnings per share estimation was $2.18, and it was actually 2.78. And if you just scroll down a bit more, and you can see this incredible increase in revenues. See this chart, it's so amazing. And if you just click on the quarterly revenue, you can see that the quarterly revenue was okay. In the Q3 was similar, didn't go down, yeah, was consistent, and then Q4 just took off. And if you see the earnings has been going incredibly good as well. So if you go to the annual earnings, you see the earnings have been increasing. This means they are really doing good on their margins. And if we just go on to, since we are talking about the margins, let's have a quick look at the financials. And if we check the financials, just look at this. So their gross profit is 275, yeah, and their operating income is 105, okay. And if we just divide this by the total sales, that is the revenue, we get an operating margin of 15 to 17% approximately. Yeah, I'm not using any calculator right now. And the gross profit margin is almost 40 to 50%. Isn't this amazing, guys? This is incredible. We will go on to the Excel spreadsheet to just see a few comparison figures with Amazon, but this is incredible. And guys, this simply tells us that they are no way slowing down, and they will just keep rising in the coming future. And guys, this is not just me blabbering about Alibaba. Numbers speaks for themselves. As you can see right here, with a 5-year annualized earnings growth rate of 29% and a sales growth rate of 47%, it's hard to find a company with a more impressive track record of growth than Alibaba. The article further says expectations were high for Alibaba's single-day annual shopping event in November, and the company didn't disappoint as sales nearly doubled from the year ago period to $74 billion. The company has been able to stay in growth mode despite a slowdown in its core e-commerce business. So guys, as we can see, the numbers are amazing for Alibaba. And if we see right here further down on this article, if we just scroll down, Alibaba's business in China looks a lot like Amazon's in the US. Alibaba's cloud computing business is showing solid growth, just like Amazon's boom web service businesses. Alibaba also see a huge revenue growth in food delivery services. In 2018, it merged its food delivery services with its lifestyle app Kobe. I don't know how to pronounce that, but anyways, to better compete with Tencent. And sales at Alibaba's digital media and entertainment unit are also rising. The unit includes Alibaba's video streaming platform Youku, along with its music streaming service Xiaomi. Alibaba also has licensing agreement with Walt Disney. And guys, these multiple sources of revenue for Alibaba, core commerce, cloud computing, digital media and entertainment and innovation initiatives. Core commerce revenue jumped 34% to $18.9 billion. Cloud computing revenue increased by 59%. So these different streams of income, these different streams of revenue is one of the reasons behind Alibaba's amazing growth. And this is what also makes Alibaba a huge growth company with a huge potential still left, because Alibaba is not trading above its fair value. We will get on to that. So I personally think that this company has a really amazing future. But of course, guys, in the recent past, there were some allegations and some rumors flying around, and Alibaba was in the news for all the wrong reasons. And here are some of the reasons. So Ma and his financial holdings, which include large stakes in Alibaba and Ant Group, have been under attack by the Chinese Communist Party ever since he gave a controversial speech in October. At that time, at a conference in Shanghai with a number of Chinese political and financial bigwigs in attendance, Ma slammed the Chinese regulatory establishment, saying it operates with a pawn shop mentality. He mocked financial bureaucrats for obsessing over risk to the detriment of innovation. And of course, then the Chinese regulators were stung by these remarks and have responded personally against Ma by first blocking Ant Group's IPO in November, which was said to be one of the biggest in the world. And then in December, the Chinese authorities announced an antitrust investigation into Alibaba, which of course created a huge panic sell-off and which sparked a sell-off that wiped $100 billion of company's market cap. And then there were again some more rumors which created an icing on the cake, that there were some reports that Ma was missing because he just didn't want to face the public scrutiny, and he didn't want to face the investors' key questions about such rumors. And then that created further sell-off, and we are seeing that this sell-off has been going on. So what we should know about the company, so here are some points which should be noticed, and they are quite logical. So Jack Ma's reputation and fortune are linked to Alibaba, the tech giant and powerhouse in e-commerce, cloud computing and digital payments. However, the investors should be aware that Ma no longer holds a formal position in Alibaba. This is a good point. And other than being one of the 36 people that nominate a majority of the board of directors, he stepped down as chairman of the company last year and has not been the CEO since 2013. So in that sense, any pressure on Ma won't impact Alibaba directly. Yeah. We should know this, but I think people are still not aware about this, and that's why when they thought that Ma was missing, there was a panic sell-off. But the CCP's potential efforts to squeeze Alibaba, such as antitrust investigation, could weigh on the stock, and we already saw that it did affect the stock in a bad way. But the stock soon recouped some of the losses as it became clear that the breakup of the tech giant was highly unlikely, given that doing so would be against the China's own interests, which is true, guys, because Alibaba is really helping the China's economy, and the move by CCP seemed to be more about saving face following Ma's speech at the summit, and CCP aimed asserting its power over a tycoon that has loomed large over the China's business and culture, which is quite true. So then it's quite logical to think like this, that if CCP is trying to damage Alibaba's reputation, then CCP is just going against its own goals of making China the world's biggest economy, yeah, and gaining global influence. And Alibaba is playing an important role in both. It owns the world's biggest e-commerce marketplace, guys, and bringing in more than $1 trillion in gross merchandise volume annually. And it's an important partner for global brands like Nike and Starbucks. So this is a global influence, and it is bringing such a big volume of revenue to China's economy. So hurting Alibaba therefore would make China less appealing to the international multinational enterprises, and the government is looking to avoid such backlashes, right? Especially with such relations with US. So I think all these bad remarks from the government of China itself, or the parties, special political parties, they are just hurting their own reputation. And yes, it might eventually affect Alibaba's business or reputation globally. And this is what should not be happening. So as we can see right here, considering Alibaba's current valuation, however, the risk of the backlash against Ma and further regulatory action against the company seem sufficiently priced in. This is a company that has a level of market power and competitive advantage in China on par with Amazon in the US, yet it trades at a price to earnings ratio of just 25, significantly less than S&P 500 at 38. In its most recent quarter, Alibaba's revenue jumped 30% to $22.9 billion, guys, and adjusted operating income rose 44%, which we already saw, to $4.4 billion, showing the company's enviable profit margins. And this is what I was talking about, guys, that their margins are at par with Amazon. These margins are amazing. And if you are a regular follower of my channel, guys, margins are one of the most important things which the company should focus on and the investors should look into. So as you can see, additionally, its cloud computing division saw 60% revenue growth in the quarter to $2.2 billion. Based on those numbers, Alibaba would likely be worth double or even triple what is it today if it were an American company. So yes, of course, we are dealing here with a Chinese company. Now there are many speculations, there are many worries about the Chinese company, because we are not that much aware about how the Chinese government operates, right? And when we see right here, the Chinese government, the Chinese political parties are attacking its own money-making machine, yeah, which is helping the economy like hell. And anything can happen. Yeah, it's not just China, anything can happen in any part of the world. So there is a risk, guys. There is a risk always involved in any type of investment. So I'm quite bullish on Alibaba. I don't think that this business will go anywhere. I still think that yes, there's a risk involved with the government itself, but I do think that other parties will support Alibaba for sure, because when such numbers, when such key businesses evolve with such amazing figures, I think they should get huge government support instead of such backlashes. So now let's move on to some key figures. Okay guys, so I have not taken so many key figures into consideration because I just want to give you guys a short overview, and I want to keep this video short and not taking all the numbers into consideration and just giving you a much detailed overview. And yeah, so anyways, so let's move on. So this is the enterprise value divided by its revenue. So this is the key figure which I always take into consideration when I'm evaluating a company. So as we can see right here, that Alibaba is trading at 5 times its revenue, and Amazon is at 4.5 times. Now last year in 2020 it was still at 4.5 to 5 times, but Alibaba was trading at 6.6 times its revenue, and it declined because of this panic sell-off, and it came down to 5 times. So it is at a cheaper valuation, which is a good news for us. Now moving on to the second factor, which is quite important for me as an investor, is the operating margin, because this is the margin. These are the margins which actually tells us that how they are handling their business, how the management is actually handling everything inside the business. So the operating margin for Alibaba is 15%. This is amazing, guys. Now a good operating margin, I consider it to be at 20%, but 15% when you see Amazon's margin, it's amazing. 3 times Amazon's operating margin, which is incredible, really incredible. And now if we come on to the gross margin, Alibaba has 40% gross margin neck to neck with Amazon. 40%. Now these numbers are not exact numbers, guys, but they are really close to the exact value, so they are just approximations. So this gives me a fair value for Alibaba at approximately $220 and Amazon $2,959. So guys, at the time of making this video, Alibaba is trading at $237, approximately 7% above its fair value, while Amazon on the other hand is trading at $3,100, currently above 5% approximately its fair value. So we can see that Alibaba is reaching towards its fair value, and 5 to 7% trading higher than its fair value is really a good point to step in, according to me. So it's not that far away from its fair value, and considering its future growth and price to earnings ratio of just 25, I still think that it's quite cheap, to be honest. But again, guys, that's just my opinion. This is just to, show you guys that Alibaba is having a huge potential. Yeah, we are just neglecting this company, I guess, because of the fear of how the Chinese government might operate in future and how it might affect this company. Yeah, and about this delisting fears, I guess, as well. So this fear is already getting baked into the stock price, as you can see the decline. But I personally think that this company has a huge growth potential, and I myself, as an investor, I'm ready to take on this risk. So I will be investing as soon as it reaches another support level, or if it goes below $200, I will be investing more in Alibaba for sure. But again, guys, this is just my personal opinion. This is not a financial advice. Please remember that. Okay guys, so to end this video with, I would say that my personal price target for Alibaba would be somewhere between $317 till $320, and this is actually the price target until next year. So by the middle of next year, quarter second, quarter third, it should be reaching around this price target. It would have actually reached at $300 once again, but all these stupid allegations actually created a really big panic sell-off, and that's why I'm thinking that it needs some time to get off with these stupid allegations, and that's why it needs some time to get back on its feet. Though the revenue growth is amazing, the fundamentals have not changed, it's just improving day by day. And so looking at the chart, I would look onto these support levels at $226 or $224. It has bounced back from these support levels quite good, and this is the resistance of 240, which it didn't cross, so it reverted back from this resistance level. So like I said, I will be looking on to $200 range. So if it falls below $200, which I don't think it will, but if it does, then I will load up on this stock for sure, but I will still buy some more when it get onto this support level, 226. So that's it, guys. That's all for this video. So that's it, guys. That's all for today. I know we are taking a chance, and I hope it will get paid off. I'll see you in the next one. Until then, ciao.